Hello traders, welcome to your daily market update for the 19th of June. It is a Friday, it's the last trading day of the week, which does make it the saddest trading day of the week as the markets are closed tomorrow. However, we do have a little bit of data coming up. Overnight, we did see a pretty wild ride on the euro on the back of the games continuing with Greece, and it's just a real circus, but nonetheless, it is our job to follow it because it does alter our trades and can make us profitable or make us lose money. So we do need to follow it, and the drama continues. So I think that we need to continue to follow the story. The story is still ugly. There's no possible way of determining the outcome. There is a chance of them defaulting. It's getting more and more each day in terms of the likelihood. So we'll have to keep an eye on that, and that could actually start to weigh on the euro. It seems that Greece is going to dig their heels in, and we're not going to see a lot of progress in the coming days. It's going to be a game of chicken and or a staring competition. The first one to blink loses, and we'll wait and see. But coming up today, we do have some German data coming out, and that's going to play a minor role in the euro, along with the account balances. Of course, the news flow coming through on he said, she said with Merkel and Tsipras is going to dominate the euro. But tonight is really focused on the Canadian dollar and the US dollar to finish out the week. More so the Canadian dollar. As you can see, we've got core CPI, retail sales, very important data for the Canadian economy, and we'll wait and see if that comes out. It will be affecting the US dollar CAD and also the CAD cross pair, so probably keep an eye on those tonight, as that's probably going to present a little bit more information. Other than that, there's not a lot of data to really keep an eye on. We do have Fed Williams and Mester speaking in the US, and that's really what I'll be focusing on, keeping my eye on those speeches, because if those guys start to really talk about an interest rate rise in September, it could all be part of Janet Yellen's plan to the meeting to ease us into understanding that an interest rate rise isn't a really big thing, and don't get carried away. And then these guys could be slowly planting the seed in our heads that, yes, we are going to get a rate rise in September. And if that's the case, the US dollar will find support, that's for sure, closing out the week. In fact, the US dollar found some support last night. We'll go over to the US dollar index chart, and you can see that on this daily chart here, we did pull away from the lows of the day, and throughout the Asian session right now, we are a little bit stronger. So we have found some buyers come back in as everybody's starting to digest the Fed's minutes. And as I said, I think that the result on Thursday was an opportunity to buy US dollar lower. And I think that as the market really gets their head around the fact that the US economy is going good, it does look highly likely we are going to get an interest rate, and there's even talk of potentially 2 according to the dot plot. Whether we get that, that'll send the markets even higher and crazier, but I don't think that's a highly likelihood right now. We'll just focus on ensuring that we do get one interest rate rise, and if the market starts to really feel that they will be getting at least one, we will see the US dollar be bidded up and find its feet. So we'll keep an eye on that. Obviously, the downtrend, if we go through some shorter time frames, we need to keep an eye on that in the short term, because we have had some falls, and you can see that if I was to get really finicky about the trend lines, there'll be another one there from the highs, and we still need to take out this swing high, this lower swing high here, before we actually can say we have a bottom. Right now, it's more just a short-term correction, and we'll wait and see what happens as the US dollar runs into the European session and the US session, whether we can continue through or whether we actually fade away and make moves lower. So I think the key for the US dollar will be the Mester speeches, and we'll keep an eye out. Going over to the charts, we'll have a look at the New Zealand dollar continuing to be under pressure. It's no surprise with the economy and them talking about cutting rates. And we had a little bit of a support, as you've seen, from the US dollar. So I think the downside is the only play to have. And the bounce that we did get was an opportunity to sell. And if you didn't get on board, we're going to have to look for an entry in shorter time frames. The Australian dollar has faded out at 78.5 cents. We are moving lower. I think, like I've said, it's going to remain within this range for the time being. But if we do get the US dollar strength come in and people start to buy the story that we will be getting an interest rate rise. This could be a good level to sell, as I do think it is going to move down into the lower end of this range in a few sessions to come. Probably, a week or two is my expectation. The euro versus the US has stalled, didn't take out the previous highs over here that we've seen in May, and we have faded out at just above $1.14. And we could be seeing a little bit of pressure on it. However, if we do break above these levels, it does open up a gap to the upside of quite significance. We could be moving up to $1.18 before too long. So we'll have to keep an eye on that, and it's going to be probably due to the US dollar for now, as the euro is going to continue to play the games that we keep seeing. The Great British Pound has had a phenomenal run. In actual fact, in majority of charts, in the chart that I look at, this is a bullish candle, making it 9 straight days of rallies. The history was 10, and can we beat it today? In my money, I'll be looking to sell within this rally just to pick up a few pips to the downside, as I think it is overbought. Yes, it is bought up for a very good reason, but I think that today it could actually just flounder around. So we'll wait and see if we can make new history and continue to push higher, or if the market comes off, but it is very overstretched. Yes, the economy is doing quite well, and there is good reason for it to be bought up, but at some point all rallies need to have a bit of a pullback, and I think that this one's due for one, and then sure, it could potentially make its next leg higher. The US dollar versus the Canadian dollar bounced off the lows quite heavily. We did have a pretty nice bounce here, making a really nice spinning top candle formation, and that is indicative that we have found some short-term support down here at $1.21.2, just above $1.21 even, and we could be moving higher. We still need to maintain caution around the $1.23.5, as that is major resistance level, as I've spoken about previously, and it was major support here. And before we become ultra positive on the longer term bullish trade, we really need it to break above that. So for now, it'd be scalping and keeping an eye on the shorter term price action. US dollar versus the Japanese yen, really much, it really fell and then come off its lows a little bit. So we're pretty much flat right now. It's trying to decide where it wants to go. I still believe that there is major support around within this yellow box that I've put here. And if we did get down into that region, there'll just be better opportunities for buying for the longer term. For those of you who want to trade this intraday, I would be moving to some shorter time frames, and similar to the US dollar index, I would be looking at the areas of resistance that we've got coming through here, and we'll see how it reacts, whether we can pierce through it or whether it finds resistance and actually starts its next move lower. Well, that's it from me today. Have a great weekend. I'll be back again next week. So until then, trade well.